And away we go. What's going on, guys and girls and dividend investors? What do we say around here? You fine looking dividend investors. Happy Halloween. It's almost that time of year again. And we are together once again for our weekly communion on Sunday evening. Talk a little bit dividend investing, what's on your mind, what's moving and shaking in the markets, what are you looking at, what do you want to know from me? I want to know things from you. I want to know, where you're from, what are you buying, what are you doing? And for those of you watching on replay, again, thank you so very much for joining. I know Chris P, you couldn't make it. He has to go to sleep. He's tired. He says he misses these live streams, these community communions we have together. So no worries. You guys watch on the replay. So happy to have you watching. And as always, I'm going to get right into it and show you exactly what we sold, little bit of why we sold it. So without further ado, yeah, Will, John, Frank, Steve, Tutomi, my friends, you guys, Pat S, you're here. You're curious. Well, your curiosity will be sated. No worries as to what we bought. So, but seriously, how are you all doing? Thank you. Here we go. What I sold, because I want to condense and consolidate. Now, again, if you get the newsletter, if you listen to the podcast, I already covered this stuff earlier today, so not going to be much of a surprise. So sit through it, bear with it. We'll be able to hang out once again. Actually, let me do this. Belay my last technical difficulties here. It's not technical difficulties. It's this person on the other end here trying to work all this stuff. So there you go. You saw it. Now we'll do it again. We want to share the entire screen like that, like this. And this is what I sold. It is Celanese, ticker CE. Many of you aren't too familiar with Celanese. Now, we learned of Celanese, came onto my radar because Berkshire Hathaway and Warren Buffett had been buying Celanese Corporation. They are specialty chemicals that go into just all kinds of things. Yeah, they make cigarette filters, but they are inside of just almost everything: eyewear, sports equipment, EVs, all kinds of just. It's almost innumerable. All the different various things that Celanese is on the back end, like on the inside of, so to speak. But either way, here I'll just show you this. I don't know if you guys know what 13f.info is, so let's start from the top. This is really interesting. This is the 13F filings of hedge funds, of fund managers. I don't remember the minimum, maybe you guys do, of what you have to be included in that. But right away, Berkshire Hathaway at the top, is most search managers. And there's just a ton. You can play around with it, but this is what you do. Click on them, and it will show you all their current holdings. And it'll show right up here the most recent filing was the Q2 2023. Q3 will be coming out soon. Remember, we're always looking in reverse, but the way that you can check it is to, where are you? Why am I having a brain meltdown here? What is going on? Well, this is embarrassing. I don't see you. Usually there's a thing that says to compare. Oh, okay. Hey, it's Sunday night. It's the end of the weekend, right? Here you go. You're going to click on the Q2 2023. X out the ad. So it brings you here. This is their Q2 2023. And then this box right down here, you're going to do compare to whatever quarter. We're going to go the previous quarter, 23, Q1. And this will show you everything, the changes right here. So you go to change, click that again. This is what we cover in the videos you guys watch. You can see for yourself. But right down here, you'll see the opposite, what they completely sold out of. But then right here, we got Celanese. They actually reduced their holdings by 39%. They went from 8.8 million to 5.3 million shares of Celanese. Interesting, not going to buy or sell just because that doesn't always mean it's Warren. It could be his lieutenants doing that, Todd Combs or Ted Wexler. But either way, it's just really cool that you can look at what these funds are doing. So that's right there, the first of it. But Anyway, so Celanese, we're up 14%. We have 25 shares, or had 25 shares at an average of $100.14. And solid company. Going to get into a little bit of the numbers here. Yeah, currently we're at 10.7 now because of what we sold. But dividend growth, see, I blew it up too much. Now I can't fit it all on one screen. So apologies to those of you that have small, poor eyesight or whatever. But 26% 10-year CAGR. Really interesting thing here we're going to get to. They have not grown the dividend so far this year. And their ex-dividend date was the 27th of October. So I sold those shares on the 27th, those 7 shares. So we are still going to get the dividend because we held those shares at market open on Friday on the 27th. As long as you do that, you will get the next dividend. So next, what I want to show you here is that, oh yes. So it looks like, they forgot to raise the dividend, right? Look at how long it took them here. They didn't raise it from February till August, February 21 till August. So essentially what they've done the last few years, they raised the dividend in the spring of year 1 and then again in the fall of year 2. And it's still within that calendar year. So they raised it in 21 and then in 22. So it's kind of a wonky thing, but as long as they have that raise, it's still going to count. It's not going to matter. But it may matter for us because we're not getting that raise to compound as quickly as we would like. But either way, that's something that they've been doing. I'm going to breeze through these a little bit quickly. So if you want to pause the video, feel free if you'd like to look. What I've liked about them, free cash flow payout ratio is 28%. We can make this bigger. Come on, work with me. Work with me. There we go. That's too big. And I'm excited to get you guys in the chat. I want to talk with you, but let me get through this. So 28% free cash flow payout ratio, really, really low. Their free cash flow per share, obviously easily able to cover that dividend. Sales have been declining a little bit, not liking that. Shares outstanding, only 109 million. They do buy back shares. But one thing here, return on equity, return on invested capital have been going the wrong way recently. Margins, not terrible, but still everything's kind of declining. But one thing here that's a bit of a bugaboo is their net debt exploded to 69% because they bought from DuPont a mobility and materials division. I think that's what it's called. I may be off on one of those. It's M&M. They call it M&M. It's not like the rapper, ain't on 8 Mile here. But they paid $11 billies for that division, brought their debt way up. And then one thing I don't like is the interest coverage ratio has fallen way, way low. And if you don't know, if you're new watching this, interest coverage ratio is important because it'd be like you if you're in your own, personal account. That 1.53 right there means that Celanese currently has $1.53 of operating income to cover every $1 of interest expense. And that doesn't give them a lot of wiggle room. So you'd like to see that higher. Simply Safe wants to see them at 8 to have $8 to cover every $1 of interest expense. But that's anyway. So that's it. That's one of the reasons why I sold them. And before I jump back to you guys, and I did, by the way, show you what I bought here. So alpha spread, remember, this is always their opinion. They don't know the future. A lot of times, analysts have trouble predicting earnings for the next quarter. So it's kind of funny that we predict 5-10 years in advance what cash flow is going to be. But either way, if you go with it, this is their opinion. It's about 42% undervalued and the base case. And then if there was 5 years of decline, it would be about $148. So they're saying about a 24% margin of safety on Celanese. Maybe you want to take a position. Maybe you agree. Maybe you don't. But anyways, for us, I decided to go with the stalwart, which they say is still overvalued right now, Johnson & Johnson. They're down at a 52-week low, about $145.40. $145.60 was the close on Friday. But yeah, that intrinsic value, $130, they estimate on the base, and on the worst, 108. I think a lot of people are just going to go, they're going to back up the truck, as we say, for that 108. But either way, been buying J&J, and we'll bug out of here once I show you the J&J. Simply safe score 99. Simply safe score of 99. Actually, you know what? Here, why don't we do this, and then I'll get to you guys, because I know a lot of you invest in J&J. So if you want to see the Simply Safe profile on them, feel free to pause any of this. I'm going to go really quick here. Yeah, dividend growth, 9% 20-year CAGR, 107 years uninterrupted dividends. They did spin off Kenvue, obviously, so they have their medtech and biopharmaceuticals. But yeah, their dividend yield right now, 22% above the 5-year average. Obviously, 5-year average tells us nothing about what the future holds. And as you can see, they were as high as $180 a share, probably a little overvalued there, which is why I was not buying and waiting for us to get into the 140s. I was stubborn about it. Free cash flow payout ratio is coming back down. It was a little bit high. They did pay up for a biomed. I think that was the I don't know how to say it. A biomed. Somebody tell me. Help me out on that. I brain farting here again. This is getting old, I guess. But I think it's the heart impeller. Somebody's like, dude, hey, I'm a welder. I has a passion for passive income, baby. Okay. So these are just the opinions of me, and I'm here to talk to you guys and share what we're learning. But yeah, just really good free cash flow per share still. And some numbers, 2.62 billion shares. They slowly buy back shares, sales going up. They're going to be fine. Really high return on invested capital. Love to see those numbers. Just an outstanding, solid company. And their net debt, I mean, just come on. 8% net debt, just low. And remember that ICR? $34.59 to cover every $1 of interest expense. So there you go. I guess you got a 2-for-1 on J&J and Celanese. So now we're back. We can party. What do you guys think? What do you think of J&J? Are you buying J&J? Are you staying away? I know with the healthcare sector, I mean, we've got treasuries going up there. They're sucking investors away. We've got, the patent cliff is what you hear in my brain. Like you see the smoke coming out of my ears. We got the patent cliff with Stelara. They have the Medicare drug price negotiations, the talc litigation. There's also threat. People think single payer is coming for the healthcare sector, which would affect J&J. So I think they're going to be fine long term. They have 25 platforms with $1 billion in annual revenue. And I think it's just a great time. And I'm excited. And I'm oddly rooting for next week to see the 130s with J&J, because I will buy more and probably wipe out the rest of our Celanese position and just go all into that. So I'm going to get caught up to you guys here. We are live, everybody. And what are you buying? What do you want to know? Ask me what's ever on your pretty little mind. We can talk about it. There it is. All right. We got DeVito Dom. Is that Dominic DeVito or whoever you are? Number 5, buying J&J. Sweet. All right, Matt, what's my highest dividend stock? What do you mean highest yielding? If it's highest yielding, it's probably going to be good question, man. Let's real quick. I want to take you guys back into the world of Simply Safe dividends. All right, let's share that. And let's see. So we'll go up to the top. Take me to the top. Is that a Motley Crue song? Take me to the top. We do have a new Black Friday deals are coming. I'm going to get a MacBook Pro because this laptop I got stinks, and I've about had it. I may just, there's a few times lately I've been wanting to just pull the Incredible Hulk and just Hulk smash it and be done with it. But we're not going to do that. What am I doing here? Oh, yes, my portfolio. You want to know my highest yielder? So, sorry, jabberjawing. The highest yield on cost that I have is currently Energy Transfer at 20.19%. Yeah, it's only 31 shares, and I started buying during the pandemic at $6 a share. Obviously, wish I would have bought more, but I didn't. But there you go. You can see Ares Capital 10%, Altria at 8.7%. But those are my yields on cost. And obviously, with Altria, you can get a higher starting yield with that. but that's one of the only ones, dude. I mean, look what buying and holding quality companies when there's some crazy event going on that gives us a great buying opportunity. Right here with ExxonMobil, 8.5% yield on cost, only 44 shares, but uh, average cost per share $45. We were buying during the pandemic, so this is a little insight into what that can do. And so there you go. Energy Transfer, Matt, is my highest yielding, but the highest yield right now that you can get that I have is Aries Capital 10.29 and Innovative Industrial Properties, the REIT at 10.29. So there you go, buddy. I hope that helps. I hope you, I don't know, makes sense to you. What do you guys want to know? What do you want to talk about? You want to talk about how horrible the Bears are? I don't know. Dan, hey Dan, you're my accountant guy, right? I don't know about killing it, but I'll drink some water to that. Ooh, Enbridge. I thought for a second, Pat, you were buying Enphase. Have you guys seen Enphase? I don't even know what's going on with that, but they have gone from I think $330 a share down to like 79. I don't know if they're going out of business. I don't know what they did. What is the deal? They don't pay a dividend, but and you're buying J&J. Yeah, lots of J&J. I love it. What do you guys think about J&J? Are you buying it? Are you staying away? Jim, thank you for popping on in. And RC, what is RC? I don't know what RC is. It's not the cola. All right. Yeah, let us know. Tell me so I don't have to look it up. How long have I owned Celanese? I believe I started buying it just over a year ago. Right about a year is when I started buying. I believe it was, yeah, I think like December. I guess we could look it up, but I think it was December or so of last year. And that's how long I owned it. But again, uh, and what do you guys think about this? That I really think, from what I've learned, that the only time you sell is if your thesis is busted or you see a better opportunity for that money. And right now, comparing Celanese and J&J, I just think that J&J is likely to have the better performing dividend growth and the better stock price potential. I don't like the direction that Celanese is moving, and yeah, I'd love to know why Berkshire sold is reducing their position. And again, it's not a bad company, but I just think that and this begs the question then. So why don't I sell AT&T and T and Intel? And this may be something we learn together is that A, I'm stubborn, and B, I don't like to take a loss. I hate taking a loss, and I'm the guy that tells you that you don't have to make your money back the same way you lost it, right? So, hot dog. Dude, that's a great name. I love it. I am not buying any more Altria, and this is something my wife and I are talking about. I'm trying to involve her more into what we do. We've each lost people to lung cancer, and while their product is legal, uh, it's a tough one because I love the dividend yield, but trying to think of principle where they put it this way: does the business harm somebody in the, I don't know, value chain or in from the, and this could go so many ways, right? Because look at McDonald's or look at PepsiCo. If they promote these high sugar, high fructose corn syrup, sugary drinks that are affecting children and diabetes and yeah, it hurts. But I guess look at Warren Buffett. The dude has a couple Cokes a day. I believe Charlie Munger does too. You could say that with candy. Hey, they're still okay, but I don't think Warren would have been having a couple cigarettes a day and lasted as long as he did. So, yeah, it's a tricky one, and we're not buying any more right now. We're thinking about it and what, but yeah, that's what we're doing with Altria. So, Kevin, nice man. You've been slowly building $500 position in J&J. I like it. Oh, 450 a month. Yeah, that's solid, man. That's one, and also this is another thing. I go off of these tangents. This is another thing with J&J is that it's solid. It is a sleep well at night stock that I know it's going to be a little bit of, rough waters for the near future, but I would be comfortable holding them as things are, even with all the talc litigation and whatnot for the next 10, 12, 15 years. So it's like, why am I not putting more money into them? So that's kind of another reason that we are doing that. J&J currently now sits at, trying to do it sneakily. We have 41 shares and we have a cost of 149.30. So we're actually underwater on the J&J position. Carlos, what are you buying? More Altria and Texas Instruments. That's a fun, nice. Instant replay. Yeah, Texas Instruments. That's a good one. They've been beaten down right in the 140s. Got a nice yield. What is their yield at? Come with me, Carlos. Come with me to the land of simply safe dividends. No. People are like, why is this lunatic singing? What are we looking up? I don't even know anymore. Is it beer 30 yet? I think it is. I usually wait until I'm done. I don't like to imbibe on the. Anyway, so enough about me. More about you, Carlos, and your TXN, because this is one that could be useful to a lot of you. Safety score of 90. We're not going to do the full. I say we're not. Yeah, they paid uninterrupted dividends since 62. Yeah, slowing down lately. I think a lot of companies are, but they have a dividend growth streak of 19 years and 61 years uninterrupted, right? They're like boring analog chips, I believe, but we need it. Yeah, too bad. This is why I didn't include them in the newsletter, because they go ex-dividend tomorrow. Perfect example. So you cannot buy Texas Instruments tomorrow, which, yes, is the 30th. You can't buy Texas Instruments tomorrow and qualify for the dividend on November 14th. You would have had to buy on Friday, or actually, if you guys know, can you buy in pre-market before the market opens and qualify for the dividend? That sounds like a question for ChatGPT, right? That's a good one. Let me know if you know, but yeah, look at that dividend yield, 31% above the 5-year average. All right, screw it. We'll get a couple numbers here. Yeah, buried at the low end of the 52-week price range. So 52-week low. That's interesting. Very, very interesting. The free cash flow payout ratio, 273%. That is a big old bucket of yuck. It's not even Halloween yet, and that just scared the bejesus out of me. I didn't know that was going to be a spookananny, but that's because their free cash flow per share just fell off a cliff. I would love to know, because I don't, why they dropped from $6.50 down to under $2 the trailing 12 months. That no bueno. They're probably going to come back up with that, but still buying back shares. Really, really high still, even though they've come down, really high return on invested capital, return on equity. And yeah, that free cash flow margin been stepping down. Big fall off. What's their net debt? Oh, wow. I don't know if did they buy something? Because this is a lot of times I've seen it. Like they had basically no net debt in 21 and then a smidgen, a skosh of, I just want to use that word, of net debt in 22 and then up to 12%, which is not a lot at all. But yeah, 24, they're a solid company. Actually, this looks really interesting. What do you guys think of TXN? Are you buying them? Where's my chat? What happened? Okay, here we go. I'm back, baby. Let's see. J&J is a wonder company. Yeah, I mean, they're not perfect. There's a lot of uncertainty. And like I've said that the Eli, the market hates uncertainty. And when there's uncertainty, you get buying opportunities. So it's kind of an unfortunate thing that for a lot of the solid companies, you have to wait for a lot of uncertainty or something crazy to happen in order to get a really good buying opportunity. So I think we're starting to see it with J&J, and that's why I wanted to take an opportunity of this. So Carlos, thanks for that thought on Texas Instruments. Is war good for J&J? Um, by the way, will they call me back to serve? Oh God, dude, I hope not. I'm pushing 50. No, I'm not getting called back. I was in the inactive reserves, the non-drilling reserves when I got out for I think I had a 6 or 8 year commitment, but honestly, no, man. The once that is up, I don't I think the age is 32 here in the United States. I think 32 is the oldest you can be called to active duty. But if they're calling me to serve, dude, we're not doing this live stream. We're not talking about stocks. Uh, a stock price going up or down is going to be the least of our worries if I'm getting called to serve. So yeah, it's going to be dark days here in the old US of A. But no, it's not a heavy question, and I hope we don't have war. But it depends. If there's a demand, if the war creates a demand for J&J's products, then yeah, it'll be good for them. I think it's as simple as that. I've never done any kind of analysis on how they've done through wars, but look, they've been paying an uninterrupted dividend for 107 years. So that's Korea, Vietnam, you know, Desert Persian Gulf War 1 and 2, right? World War 2, World War I don't know one now. What's 2023 minus 107? So World War One ended in what, 1919? My math is bad. So right about World War One, they've been paying an uninterrupted dividend since, right? So let me see if I can do this on the sly here. 2023 minus 107 since 1916. So they started paying uninterrupted dividends right smack dab in the middle of World War One. I tell you guys, I am god awful in math. Just awful. I don't know why. It's just the way it is. And that's the way it is. Yeah, a lot of these companies, it was good for Coke. Sure, sure. Oh, dude, sit it. Cody, am I watching the Bears get destroyed? No, I'm obviously not right now. I was paying a little bit of attention to it. And I'm really only concerned with the fantasy football guys I have and then the ones that the person I'm playing has. So not looking good. Somebody tell me if DJ Moore does something good. That's what I'm really concerned about. Oh, dude, Cody, by the way, look at that, man. Nice new avatar. I like that much better. I really do like that a lot better, man. That looks slick. Nice job. And by the way, Citizen of the Year YouTube channel, you know, if you want to drop your link in the comments, I don't care. More the merrier, man. Sidelines to J&J, 100 shares of Kenview. Oh, that's right. That was your first 100 share position of Kenview, I think, right? And they haven't been doing well, I don't think, have they? Both would be hit when J&J loses the talc case. Yeah, I'm not 100% certain on that. Bill's waiting on J&J. Why wait on J&J? Oh, you're out of cash. That's why. If I only read the rest of your sentence, man, or the next sentence. Okay, so why? Okay, he's going to share with Y on end phase. California's, I don't know what NEM 3.0 is, killing solar. Yeah, that's interesting, right? Because we've seen what's the Florida Power and Light, right? Florida Power, which is, I wish I could talk to you guys. I wish I could hear you. It's the NextEra Energy. They got crushed, and I think a lot of the green energy stuff is starting to kind of wane, right? So WANE, not like Bruce Bruce Wayne. Somebody's like, what? He said Bruce Wayne's buying NextEra Energy. No one likes taking a loss. Yeah, that's back to my loss and opportunity cost. And I understand it. And I'm fully admitting I have sunk cost fallacy going on hard with AT&T and Intel. I was just talking about it with Ryan Williams with Intel. My cost is $41 and change. When they got to 40 and change, I was like, I should sell here, but I'm going to wait probably a couple more days. I'm going to sell at 41.50. That way I can get a slight little gain. And the next thing you know, it's like they're at $32 a share. And I'm like, son of a, that's me. I'm going to learn someday. I'm going to learn, right? Maybe not. Beat it into my head. We're going to have to do. Any high dividend alcohol stocks? I don't know about high dividend, but I was thinking about Diageo. I know Brown and Foreman BF.B pays a dividend, and uh, what's the Remy? Who is Remy? I don't remember them. I yeah, I don't know. I don't. What's DEO for whatever you guys use? I know it's super solid. I'm gonna look here. You just put in uh, Diageo, which is DEO. And my slow as molasses computer is not going to cooperate. Anyway, let me try this. DEO. Come on, buddy. I should have just showed you because you're just staring at me, staring at my computer, and this ain't fun for anybody. Currently on Alpha Spread, DEO is $147 a share. You know what? Let's look together real quick, everybody. Come on, Matt. Let's go to check that out. So I do support Guinness. We actually just were by my brother-in-law's today, and we bought him some Guinness for his birthday, which we helped him consume. So happy birthday, brother-in-law. Let's break into that Guinness we bought you, which Diageo does own. Let me say, I forget who else, but yeah, 99 safety scores. So actually they're pretty high compared to their 5-year average. Let's see exactly what they make again. They make Scotch. Wasn't that weather? No, weather Anchorman, Weatherman, Anchorman. Scotch, whatever he says. Sorry, I'm reading here looking for. Okay, here we go. They have Johnny Walker, Guinness, Tanqueray, Bailey's, Smirnoff, Captain Morgan, Crown Royal, Don Julio, Ciroc, I think how you say it, Buchanan's, Casamigos. Oh, that's the George Clooney Casamigos, J&B, and Kettle One brands. And they operate in the US, UK, Turkey, Australia, Korea, India, Greater China, Brazil, Mexico, South Africa, Nigeria, and why don't they just say internationally? Like, why list 19 countries and then say internationally? But yeah, 1886. So anyway, real quick, let's see the 6% 20-year CAGR. They have raised that dividend for 25 years. So that is nice to see. They do pay biannually. So every October and April they pay. And there went ex-dividend August 24th. That's weird. Ex-dividend in August and they pay in October, almost 2 months later. But yeah, their dividend yield 26% above the 5-year average. And they too are at a 52-week low. 17.5 means you're going to be paying $17.50 for every $1 of their earnings. And there we go. This is why we need a new computer. You saw that. Processor on this thing is outdated and stinks. Looking for those Black Friday deals on the MacBook Pro with that M2 processor. Will be, dude. Anyway, yeah, 63%. They were up there. That's no bueno. 98%. Free cash flow. All right, a couple numbers here. Shares 2.27 billion. All right, sales up. Decent ROIC. ROE is very high. And yeah, their numbers look good. Net debt 64%. So anyway, that's Diageo. So that's probably one of the higher like pure plays. I know some other companies have exposure like Bud. I don't know. I know a lot of you guys probably aren't comfortable with Bud, but who the fans of the UFC are now boycotting because they signed a deal with Bud. I did see that. And Dana White, I think, called the fans or people effing idiots or something. But hey, you know, Clorox, solid. I had sold them and I sold out when they bumped to like 170 a share. I felt they were overvalued and I don't remember what I put that into. But yeah, solid. They're going to be okay. A lot of you people probably don't know that Clorox owns Hidden Valley Ranch. They own KC Masterpiece. They own, who was that? They own a lot of brands that you wouldn't think that they own. What's the charcoal briquette one? Kingsford. I think they own Kingsford. And they own like cat litter. They're partial owners of a clay mine or two that they use for the cat litter for the clay, clumping clay or whatever it is, how it works. I don't know. I'm the one always stuck cleaning my cat's litter box. So I am a connoisseur of cat litter. Says nobody ever. I'll be the first one. Hey, Mountain High, what's up, man? Haven't seen you around these parts for a little bit. Coke seems attractive. Yeah, they've been. Yeah, exactly. Sleep well at night. Again, though, I was more preferential to PepsiCo because of the snack foods that they actually sell more in snack foods than they do in beverages, which a lot of people aren't used to that. What's 35 years of active? Tim, were you in for 35 years of active duty, or is that something else? Let us know. I want to know. Okay, see, this is the problem. I need to be so much better getting caught up with all you fine dividend investing viewers. But yes, the I was on board the John C. Stennis in my earlier years, but yeah, you're right. Before they call the nursing homes, they're calling me. So, ooh, 2 minutes to midnight. What a great song by Iron Maiden. 2 minutes to midnight. Uh, I just saw a band. I saw a Pantera cover band here in the Chicago area yesterday. Little disappointed. They only did the screaming, growling songs because the singer apparently couldn't sing. So, hey, we can't get beggars can't be choosers. Smuckers is on your watch list. My input. Well, I did a video that listed Smuckers as one of the good buys, and that was in the spreadsheet that we did. But Smuckers, yeah, they're solid. They are. Well, let's see if I can get you a safety score here, my friend. The Peculiar. You see what happens when you read and try and talk? Maybe it's just me. People are like, no, that doesn't happen to me. Get all twisted. Hey, I'm looking at getting a subscription to the print magazine of Barron's. I get distracted a lot, sometimes reading things on screens and on phones, but this damn thing, it ain't cooperating. So Smuckers, they're solid. They're not going anywhere. I wanted to get you a safety score that they have here. Here we go. 80. And they have a 3.76% yield, which is 24% above the 5-year average. And they have an 8% 20-year CAGR. They've been raising it for 21 years, 51 years of dividend growth for Smuckers. And yucky. They have a yucky chart. No, they should be fine. 48% free cash flow payout ratio. And what did they just buy? They just bought something. Their net debt only increased a little. They look solid. There's nothing wrong with Smuckers. They bought a brand. What did they buy, everybody? Somebody clue me in. Any good time? Oh, I thought he said any good time stocks. I was like, not on this channel. We're going to talk about that. Any good tire stocks? Yeah, GT. I know that's one Goodyear tire. Nah, I think that's another really competitive, capital intensive industry. I don't really think they have much of a moat. Quite honestly, think about it this way. If you were going to buy tires, think of the tires and like Coke. How many people are like, I only drink Coke or I only drink Pepsi? Honestly, when I'm going for tires, and I know there's purists out there, but for me, I'm usually just like, hey, what deal do you got on tires? Which tires are, not the cheapest of the cheap, but what's a, low end tire that's going to last for a little while, So if it happens to be Goodyear, we buy it. We had a deal last time we got tires. We got the Pirelli Scorpion tires on our GMC Acadia. So think of it that way. A lot of, I know they're not a pure commodity company, but thinking about like lumber companies, and you could maybe group them into that. When you're buying a board of lumber, do you really care where it comes from, or you care which is the cheapest, what the price is, So, yeah. Oh, sorry. The end of your question there, I didn't get to it. Would I buy? Oh, yeah. I have no problem with OTC stocks. You just got to really know what you're buying. And there's probably not going to be a lot, if any, analyst coverage on that, which could be a really good thing because it means there's more opportunity with the OTC stocks. But again, they don't have to adhere to a lot of the stringent financial, not regulation. Yeah, I guess regulations like NASDAQ would set compliance. They don't have a lot of compliance. So, You just really got to know what you're buying with the OTC. But yeah, there's nothing wrong with them. Eli thinks Texas Instruments is building a bunch of plants like Intel. Yeah, um, they're going to be a beneficiary of the what I forgot the name already. The Chips Act. That's what it. Yeah, the CHIPS. I don't remember the acronym for it. Just like our government, they have to make an acronym for everything. So yeah, Kevin, keep Texas Instruments, everybody. That one looks really solid. I mean, I guess I'd have to pull up a chart to see where support might be. When I was looking at J&J, I saw support right around 147. So that's why when it broke 147, I was like, oh, okay. So we may be going lower. And I think it could push into the 130s. And honestly, for somebody that's a long-term buy and hold investor, I'm rooting. I'm hoping it goes down to the 130s, 120s. Hello. Come on, bring it. I'll be buying more. I'll be happily buying more. Really? Totomi staying away from Texas Instruments? Interesting. I wonder why. Solar is short silver too. Silver? What do you mean short silver? I don't get it. I don't get it. Wait for Broadcom. I've never really dug into Broadcom, but I know they're solid. I know they're ones that everybody loves mostly. Oh, STZ, is that Constellation Brands? I think, right? Yeah. It's like funny. I'm like, oh, who is that? And I read the next comment. Just right. Yeah. Constellation Brands. Yep. Is there any way to buy Russian equities? Dude, honestly, this would be my advice to you. If you're take whatever money you're thinking about that and just go to the nearest casino. I think you'll do much better. Honestly, I don't even know why you would want to buy Russian equities. I don't know if you can. And I'm serious, dude. That's crazy. That's one of the reasons I sold out of Neo. I started thinking about it and I was like, the Chinese Communist Party, whatever they say goes. They could wake up tomorrow and be like, no more private companies. Neo is now owned by the Communist Chinese Party as property of the state. And what happens? I guess everything we have just goes away. So yeah, I don't dude, I would just go to the casino with that money instead, I think. Plus, yeah, I wouldn't want to support Russia, but good question. I don't know. Maybe somebody knows if you can buy Russian equities. STZ makes Modelo and hot dog water. I don't know what that's a reference to, but I get what Tim's saying. What is hot dog water? What's that a knock on? You got to tell me. Is that a knock on hot Modelo? I like Modelo. 35 plus. Yeah, I think it was 32. No, maybe it was 35. No, you know what? I was in boot camp with a dude that was 32 and we all called him grandpa. And I think he had just made it. So I think it used to be 32 way back in the day. Look at this guy. Dude, you were in the Navy for 2 years and you made third class petty officer. That is rapid fire. I don't know how you pulled that off, but ETN. I don't remember ETN. It's not electrician's mate because I was in with electrician's mates. Those were EMs. Tim, you were in the air. Dude, salute to both of you. Thank you for your service. Really do appreciate that. Thank you. Oh, buddy, in the early 80s. Yeah, yours truly was playing with G.I. Joes and Transformers and watching Pee Wee Herman in the early 80s. So nice. Twinkies, Dresh, Twink. Oh, yeah, that's what it was. Schmuckers bought Twinkie. I don't know if he's still here. Ryan's in the house. Sorry, man. You know me. I'm all backed up. He'll pop in. Usually he's doing his workout, his Sunday evening treadmill walking or whatever. The vaccine mandate happened. Oh, okay. Oh, so that's what happened. I gotcha. Hey, that's it wasn't Twinkie. You're right. Smuckers bought Hostess, which owns Twinkies. So you both were right. Yeah. Oh, Kevin. Dude, I gotta have you on again. That was fun when I did yours. I think Kevin's taking a break from YouTube, if I'm not mistaken, right? Thanks. And that's all it is. Like, honestly, like I've said before, I am a construction worker type guy, welder, but I have a passion for passive income. So everything I say is literally just an opinion for whatever that means. I'm fascinated with this, trying to learn as much as I can and become a better dividend investor. And by extension, share what I'm learning on the channel to help you all become better dividend investors, even if it's a smidgen better. Then my job is done here. Let's see what we got, Trey. I think you've been in here before, Trey. Net metering is essentially a price utility. Oh, net metering. Net metering? What's net metering? Cool. Oh, NEM. I got you. 3.0. Thank you. Thanks for sharing that, man. Appreciate that. Yeah, that's something I'm not I am interested. I'm not I haven't been kept abreast of. Interesting. It must be Sunday night. I'm trying to think and respond and read a comment, and you get stuff like saying infrastring. So Texas Instruments is spending too much money in infrastructure. Yeah, I don't know. I haven't dug into TXN. I do believe that I think we own them inside of SCHD, right? If you guys want to look at the current holdings of SCHD, let me know. We can do that. If you want to have some fun with that. Can I look back or comment on why Coke was in 43 and 98, crashed, took till 2013? Just the market, open cry market. People didn't want to buy it. It's as simple as that, really. Unless they were diluting the heck out of shareholders, which they may have been. I don't know back that late, but that's all that the market is, man. You have one group of people buying, one group of people selling. And if the price crashes when nobody wants to buy, and it's just a fun little thing to think of, like it's an open cry market. It literally is like eBay, just hundreds of thousands of auction transactions every day. And that's it, man. Like, sometimes a stock will get so expensive, there's nobody that's left to come in and buy. And when nobody's buying, people are like, that got in it for a trade or something. They want to take their profits. They start selling, and it just starts. It's a whole cycle, man. It's why you get I don't know, Elliott wave theory, something like that. I don't know. He's got, hey, Ryan. Hey. I got caught up to you people. It happened. I wish I could have like balloons raining down. I got caught up. Hey, what's up, Jeremiah? Thank you, my friend, for swinging on by the channel. Taking some gains in Visa, AbbVie, and Procter & Gamble, buying SCHD and UPRO, which I don't know. They have unrealized gains below 5% and are underweight. Yeah, hey, that's nice. SCHD, honestly, I hold it in the Roth. I'm probably going to get that up to 10%-ish of the portfolio. We're getting there. We're getting there. Just because it's 100 businesses you're buying all in one shot. So I really like that diversification. Totomi says, in his opinion, Texas Instruments will slow down in growth because there's card chips. Yeah, I know that they have a lot. They're more than calculators, right? For me, I think, TXN, that's calculators. My kids have those calculators. The T1000. I think we're getting into the realm of Terminator now. People are like, that's Terminator. No, that was the TX1000, not TXN. I don't know. I'm confusing Texas Instruments and Terminator. This is what you get, people, at the end of a Sunday night. And it's about time for Papa to have a beer or two as I wind down the week. Thank you. Yeah, TXN is in SCHD. And that's one of the reasons I sold my position. Really prescient that I did that. I think I sold them in the 160s when I did, and then put that into SCHD to get that exposure. Oh, Corona's hot dog water. Yeah, I like Corona. I think it's all right. You guys know what I do like that is a dividend stock, I think. I had never tried it. We got it a few weeks ago. I might have one tonight. Is a Heineken Light. It is really good. Little pricey, paying up, but Heineken, right? Oh, Steve, you're right, man. We forgot the news. Thank you, Steve, my newsman. So yeah, let's do that. There was a ton of news. So let's do that. But I think Heineken was right? It's a stock. Please cooperate, Mr. Computer. I shouldn't have talked bad about it. I shouldn't have talked a bad. Come on. Well, you can enjoy the JM Smucker page right now. Yeah, it sounds like the computer is going to take off. Apparently, it's struggling with running StreamYard and these couple of windows I have open. So I give up. Somebody put it in. I think Heineken is a stock. It's right. I think they pay a dividend. They might be an ADR. But let me get to the latest here. We got to go down here. Let me scroll down here to the 23rd. Yeah, ton of news. You know what? I'm going to go through this not super fast, but it will take us probably 15 minutes to get through if I read everything. So we'll just stop at like the pause it if it looks interesting. Read it for yourself. We'll stop at the dividend. Oh, Estee Lauder. I didn't realize they were a dividend stock. Very interesting. They got a downgrade. So not a great time to find that they're a dividend stock. MPLX, this is 65% owned by Marathon Petroleum, had almost a 10% dividend raise. We had AEP, which is one I'm not familiar with. I guess it's AEP. I was thinking it's abbreviated for something, but yeah, they have a 6%. Dude, they've paid dividends every quarter since 1910. That's solid. That's before World War I. Visa raised their dividends 16%, but still less than a 1% starting yield. But hey, that's one of those things. It's like, do you want fast growth and low starting yield, or high starting yield and low growth? And I think it's the former that after about 10 years or so really starts to put more money in your pocket. So there you go, Visa. Amphenol, which is an electric components company, grew their dividend 4.8%. They refreshed outlook on Dow. We won't read that. Marathon raised their dividend 10%. I've heard, I think it was on Invest Talk, that they were talking about ConocoPhillips looking interesting, ticker COP. Equinix Data Center REIT raised their dividend 25%. That's pretty stout. I don't know how long they've been raising that for, but and they have a payout ratio of around 40%. There you go. There's one. I do believe that they were in my 107 REITs I looked at. If not, they sure should have been. I believe they were. Kimco raised their dividend 4.3%, but it's still 15% below the pre-pandemic level. WP Carey, they think that they're going to cut. I don't even know if they have officially announced it, but NLOP is their spinoff. I would not be interested in that. Rockwell raised their dividend 6%, which is their 14th straight year. We're getting there. Almost there. Out of breath. ExxonMobil, 4.4%. They raised that dividend. So 41st consecutive year. And just, hey, more money for us there. More money. AbbVie raised their dividend 4.7%. Very nice for AbbVie. They, I believe, now have outperformed the company that spun them off, which is Abbott Laboratories, ticker ABT. So, hey, the spinoff has been just a great investment. And I think a couple more here. Principal Financial raised their dividend 3.1%. That's their 15th straight year. And a couple more. I tell you, it was busy here at least. Walgreens, again, their dividend has been flat for the 6th consecutive quarter. But remember that as long as they raise it in 2020, I guess, let's see, they raised it in September of 22. So, yeah, they're going to be pushing that, I guess. But, you know, I think they're going to cut the dividend. But, yeah, it looks safe. ExxonMobil acquired Pioneer, and shareholders of Pioneer are going to get 2.3234 shares of Exxon. And the last one, now this one they're showing red because it was a reduction for Kellanova, which spun off KLG, which is the cereal company, but that has not announced their dividend yet. So if you remember, as long as KLG, whatever dividend they pay, combined with Kellanova's dividend, if that equals what it was before the spinoff, then it's not a dividend cut because the investors remain right here. They think that the investors are going to keep whole. So there you go. And then there you go. My Next Star Media declared a dividend, no change. They should be giving an increase for the next time around. So Yeesh. Where am I? There I am. All right. Look at this. Look at this. You beautiful people. That was long. That was a long news. It scared me. I took it there. All right. Jim, your first beer. Hold on. Wait, what is this? In the event the world switches to celery and carrot sticks because of the weight loss drugs, what about Dole? Dude, it ain't gonna happen. Have you seen some of the people that we share a country with? They may stop, people are gonna snack. People's habits die hard. I don't think this is gonna go anywhere. I don't. I mean, and put it this way, what was the share quote I shared? The share quote I shared. That sounds silly. Cher, the entertainer, singer, performer, Moonstruck, Mask. I remember Mask. That was a sad movie, Mask. Sorry. I just got lost in thought there. But Cher had said fitness, something like if a great body came in a bottle, everybody would have one. So that's not going to happen. But your first year after in the dry desert was a Heineken at 6. Nice. That is crazy, dude. Kudos to you once again. And all right, what do we got here? Okay, Heineken. Is it really Heine? Is that their ticker? That's awesome. 1.72% yield. Yeah, that's one I've never even thought of looking into, but I did remember like years ago coming across that they were dividend stock. So that is one that's going down, writing with my left hand here. Scribble Heine. I'm going to look into that. Interesting. Trayvon, you have Equinix was what we call it. That looks sound. That's another one I'm going to look into. Thank God I don't have to write with my left hand. We'd all be in trouble. Good. Yeah, Kevin, dude. Take it. But he's retired. This is the beauty. Kevin doesn't need to do this. So he's just, doing it at his leisure, I guess. Beautiful. Yeah, Guy. I will look into it. I know Ryan looked into it. So Rockwell, 30 shares of Rockwell. Very nice, man. Yeah, they look solid. Dude, so many. There's so many. All right, so I do remember you, Kevin. You were adding Whirlpool or looking at them. Not adding because not positive. Catalyst near term, holding for now. Yeah, and you know what, man? We make our guesses. We make a best educated guess with the information that we have on hand at the time. The information leads us to make the choice. I said that backwards. You know what I'm saying? You get it. You get what I'm saying. Oh my God. What are you guys doing? I don't think I'm going to watch the Bears. Not the Bear. We did watch the Bear. That was pretty good. That was a good show. I enjoyed that. If you've watched The Bear, let us know. I don't remember who owns that's on Hulu. I think Hulu is not publicly traded, right? Warner Brothers Discovery is. Don't pay a dividend. Don't pay a dividend. Yeah. Well, Kevin, you know what, man? It's fine. I think Whirlpool is going to be around. I don't think they're going anywhere. I guess they didn't use AI enough in their that's kind of dying out though now, right? You don't hear I think it's on Quarter app. There's an app, I don't remember which one, but you can search every single conference call for a word. And I don't remember. Do you guys know which one that is? And you could put in search all of the, Q3 23 earnings calls for AI, see how many times it comes up. But Trailer Point Boys. Yeah, dude, that's right. Thank you, Guy. Yeah, it's that's right. Hulu is owned by Disney, and Hulu was talking about with Comcast. Oh, I don't remember who Comcast they co-owned something. Hulu and Comcast, and they were going to, I can't think of what it is. I don't remember. Or maybe it was Hulu. Isn't it? Oh no, it is Hulu. Disney and Comcast own parts of Hulu, and Comcast, it was talked about, would potentially try to buy the remaining portion, Disney's share of Hulu for themselves. So that's right. Yeah, and Quarter. I know you can search a companies, but I swear I thought there was one that you could search like all of them. Fun thing, Quarter app. Check it out. If you're a nerd and you love listening to earnings calls, QUARTR, the Quarter app. Just got real hard with those R's. The Quarter app. And you can put in a word. So I put in dividend, and it's silly. Like during earnings, not all day long, it'll say like, Kellanova dividend mentioned 6 times, or J&J dividend mentioned 3 times, and it comes up, and then you can listen to the earnings call. So I like it. I think it's a slick app. You guys should check it out. And if you don't, I don't care. It's your life. Do do whatever you want with your life. Just don't hurt people and don't take their stuff unless you have their explicit. All right. No, Bears down 24-7. Dude, hey, Caleb Williams, right? He's the guy. For a minute there, I know this is the end. This will just kick a lot of you out, but I was hoping, because the Bears have the Panthers' #1 pick in their own, and there's Caleb Williams and Marvin Harrison Jr. If they were to get those two, but the Bears will muck it up. They'll go on like a 6-game winning streak. And anyway, I love you guys. I love you guys. So it's Sunday night. I got a little bit of TV to watch and a couple beers to drink before I head off to Betty Bye and dream dream about J&J hitting all the way down into the, I don't know, 130s. Maybe we'll see. We'll talk about it if they got there. But yeah, if they get into the 130s, more Celanese is going. I'm going to just eventually slowly roll that off. But as we said, I'm a kid of the 80s. I love the 80s. I miss Pee Wee. It's a very fond memory and thing for me. So I love it. I love ending the live stream and the podcast with it. I love hearing that music. It's just such happy thoughts. I hope you enjoyed what we do here, and leave a thumbs up if you want to, and subscribe. I don't know, or not. I don't care. I'll see you again next week, and we'll talk about what you guys bought. We'll come up with a new topic to kick the show off. So everybody, thank you so very much for stopping by once again, and I will talk to you. We'll have communion again next Sunday. So I love you guys. Thank you for stopping by.